Those are all the headlines in the world of startups, but let's start with what's making news today. Fintech lender Kinara Capital recently raised around 200 crores in fresh equity led by British International Investment and other existing investors. The lender hopes to use this capital to grow 5 times by 2025 and touch assets under management of over 6,000 crore rupees. Kinara, remember, caters to the credit needs of MSMEs and within that, subsectors like manufacturing, trading and services. The ticket size of its loans range from 1 to 30 lakh rupees. Joining me now is Hardika Shah, the founder and CEO of Kinara Capital. Hardika, thank you very much for your time here on CNBC-TV18. The number that you quoted in your press release, as of September, we understand you'd crossed about 1,700 crores in assets under management, and you want to grow 5 times from here in just the next 3 years. What's going to drive this kind of growth?
Technology and demand is what's going to drive this growth. And of course, raising this capital from British International Investments, along with Triple Jump and Nuveen, we've raised a total of 55 million, over 400 crores this year alone will fuel this growth.
You know, this $90 million, I think so far you've raised about $90 million in equity, if you're not wrong so far. With the latest round, with British investment as well, how long will the capital suffice and how soon do you think you'd require more funding?
Well, we are in the business of giving capital, so we are constantly raising capital to give capital, right?
Yeah.
And as we look at our business, we look for an 18-month runway before we need to raise the next round, and that's what we'll be looking at here as well.
So, so far, what you've done is raised money through private players. Any plans of taking Kinara Capital public at some point? And if yes, are there some kind of milestones, internally that you worked that you'd want to cross off before you take the company public?
Yeah, absolutely. An IPO is always a great option for a business like ours. We are a retail lending business, so we definitely need to demonstrate some size, some girth. So when you talk about that growth above 6,000 crores, that's right around the mark that we can start thinking about an IPO, because that would be interesting for a retail play.
Hardika, give us a sense of what your cost of capital has been like, and what the trajectory has been like for you.
Yeah, I mean, look, our cost of capital ranges anywhere from 12 to 14%. And definitely we have seen that reduce over time, even though there has been a liquidity crisis, as we remember all a few years ago before the pandemic. With the interest rate hikes, there are changes and inflections going on. However, overall, what good lenders are looking for are good businesses like ours that have been profitable for 7 years, that are scaling fast, that have a great capital base, great investors. And so our cost of capital is seeing a downward trend quarter on quarter.
All right, so that's good news for the company then. Give us a sense of what kind of disbursals, what they've been like as of the latest numbers that you have. And of course, how COVID had impacted business and to what extent has it come back to pre-COVID levels?
Yeah, I mean, we are disbursing close to 200 crores month on month this year, which is a significant shift from where we were during COVID or where we were, through COVID, I would say. COVID was most definitely the biggest impact. It certainly impacted our customer segment, the MSMEs, and I know that there were so many programs by the Finance Ministry, by RBI to help with that. However, when there is no demand for product, there is an impact, and that therefore reduced our ability to disperse as well. But what we are now seeing is consumer demand is back with a bang. We see that we heard that 1.25 lakh crores of retail sales this Diwali season. So that is driving a lot of credit demand. And we are in the business of democratizing access to credit for MSMEs by providing unsecured loans. So our demand for our product has really seen a huge uptick this year.
All right. But Hardika, the fact of the matter is that MSMEs were one of the most impacted because of the pandemic. Give us a sense of what the asset quality looks like for you and what the current delinquency levels are.
Yes, I mean, you're absolutely right. The MSMEs were the most affected. The impact was immediate. And what we see now is that those that were affected have had to close shop or close down. So there has been a unwanted closing or cleanup that had to happen because of the pandemic. But now the MSMEs that have survived, demand is back, they are back to business. Our NPA levels, our NPA levels are around 3.5% to 4%, which is actually a great marker for an unsecured business and the work we do. And again, I come back to this, because we have great unit level economics and we have been able to stay profitable through the last several years, including the pandemic. It shows not only the resilience of our MSMEs, but also the resilience of our business to survive some of these shocks.
All right, Hardika, we'll leave it at that. Thanks very much for being here with us on CNBC TV 18. Pleasure speaking with you.
Thank you so much for having me.